Hello guys, welcome to another video, and in this video I'm going to discuss something very important, the concept of swing trading and why people should actually swing trade, especially the beginners, because swing trading is 10 times more easier. I'm going to be covering these 10 topics today in the quickest manner as possible, in the most simple language as I can. Okay, let us begin immediately. Okay, well, as the name suggests, swing trading is not intraday trading. Intraday trading means trading within the day, which means buying the position in the morning and closing the position by 3:15 in the evening before the market closes. Now, why is swing trading different? And swing trading means the investment holding period is around what 3 to 5 days. It can even be 1 week or 2 weeks depending, but it is not for too long period and not too short period. Well, you won't get any margin. What is margin? Well, brokerage give the brokers give you a type of kind of loan, and you can trade out of borrowed money. So if you have a margin of 10x on a stock, then you can buy 10 times than what your capital is. Is it good? Yes, of course it's good if you know what you're doing. But for a beginner, the beginner is not so used to make quick and timely decisions on such a short term basis, because intraday is always about point by point movement. So it's actually kind of brokers robbing you, because if you're new to intraday trading and you trade, obviously you will suffer losses, and since you are risking much more than what your capital is because of your margin, what happens is the two things, which is the securities transaction tax and brokerage, are damn high. The losses are multiplied. If 10x is the brokerage, the margin that you are using, then obviously the gain will be multiplied by 10. But that is good. But that is only on the right trades. If a trade is wrong, you will lose 10 times more too. The brokerage will be 10 times higher. The securities transaction will be 10 times higher. So you get a benefit of one and a loss of three. And I don't consider that ever a good proposition. In swing trade, you do not get margin. Is that bad? Yes, obviously, because you need higher capital. But is it more easier? Yes. How? Because brokerage is less, the losses are limited, because you're using the own money, and in a day maybe 2% or 3% will be the maximum risk you are willing to take in a swing trade. We are going to cover on that more. Okay. Moreover, you are taking delivery of the shares in swing trading, whereas in intraday trading, you do not take delivery of the shares. There is a benefit which is received by taking delivery of the shares, which you will study little later on. So obviously intraday you don't need much capital, there is margin, but the brokerage are damn high. But the swing trading, you do need higher capital, but it is much easier to trade. You will have very less brokerage, and I'm going to cover that later on. I frequently get asked a question: what is the best time frame for swing trading? For example, in intraday trading, people usually trade 15 minutes and 5 minutes together, or even 1 minute time frame if you are that professional. In case of swing trading, the ideal time frame to trade is 4 hour, 1 hour. Now, why two time frames? Well, you can see from my other videos is that I trade a two time frame model, which means that I check the trend in the bigger time frame, which is a 4 hour time frame in my case, and then to precisely enter, to improve the precision of my entry, I actually follow the 1 hour time frame. You can also do 1 day 4 hour time frame. There are advantages and disadvantages to both. 1 day 4 hour time frame is a better time frame, but it takes longer. But you also need practice, right, with the proper time frame. So it's better, ideal to take 1 hour 4 hour time frame. The movements will be higher in 1 day 4 hour time frame, but in 4 hour 1 hour time frame, the movements will still be higher than what you get in intraday time frames. But you'll also get more number of trades. Your target will be achieved faster. Your stop loss will be hit faster. You can place more trades. You can get more practice. So I prefer 1 hour 4 hour time frame. I personally trade 4 hour 1 hour time frame. Now, there's a concept of noise. What do I mean by noise? If you see the 1 hour 4 hour time frame, when you're swing trading, obviously, as I said, you will choose 4 hour 1 hour time frame. Correct. If you choose 1 minute time frame, do you see the amount of noise that is being involved in the in the 1 minute time frame. Do you see it? There is much more noise. You can see the movement. You see this? Well, these get eliminated automatically when you go to a much higher time frame. Right. And moreover, obviously this is I need to understand, I need you to understand the logic behind it. If you're trading the higher time frame, obviously you will have to wait more. If you have to wait more, which means you're getting lesser number of trades than what an intraday time frame guy would be trading, right? Who will be the people trading it? These are the bigger players, the institutions, the banks, the people with a lot of money who create movement in the market. We as intraday traders or retail traders cannot create movement in the market unless we are large in number. But these people alone have the ability to make 2 to 3% movement in stock, right? So these people trade the larger time frame. That is one fact. The second thing is that these people have to wait more time before placing a trade. And obviously, the people who have to wait more time, you're already testing their patience. So, what do you think when they get a good point of entry? For example, this is a well established resistance, as we all know. And if you don't know what resistance and support means, you can easily go to any YouTube video. There are thousands of YouTube videos and you can learn that. But simply to say resistance is a point where seller enters. You can see throughout this line, there are sellers entering. Now, in 1 hour time frame, say you started looking at the chart at around 23rd March 2020, you can see the lowest point of the screen where I'm holding my cursor. And you had to wait till 30th March to reach this point, right? That is around 5 to 6 days or a whole week you have to wait for one placing one single trade. So if you're waiting for that much time, how much will you be testing your patience? And again, when you get a good entry, how much will you be risking? Much more, right? You'll be trading with much more capital. And when you trade with much more capital, you make much higher moves. This move alone is 12% of the stock, and that is possible only in swing trading. So what I'm trying to say is, as I said, there are bigger players involved in higher time frame, and basically the lower time frame noise is absolutely removed. They have to wait more. They are more impatient as the time goes on, and when they finally get an entry point, then they put in huge amount of money, and that's why they make such huge movement, right? Okay. The next point I would like to concentrate is that in swing trade, you can hold your position overnight. That is a benefit and a disadvantage. The disadvantage is that the stock may gap down the next week below your stop loss and you may lose a little bit more. But if you have your risk management in proper, then overnight holding of position is always good. Why do I say that? Say in the intraday, this was the resistance, right? Now I am in the 1 minute time frame and I would like to trade intraday and I know that this is a resistance, right? And I place a short trade here, but the time is already 1 o'clock and the market closes at 3:15, which is not much time before you can get a good risk to reward ratio. Whereas in swing trading, if you are just holding the stock, then the market timings will not affect you much. Obviously, the next day the movement will continue from where you are, and you will be able to take on the full risk to reward ratio benefit. Right? You did not close the trade. Your trade won't be automatically closed. That's what I'm trying to say. That will make uh, a beginner trader much more. That will make for a beginner trader it will be much more easier to trade. Why? Because the market is not going to stop you out. The market timing is not going to stop you out. You don't have to factor in market timing. That's just extra additional effort. And if you're a beginner trader, you already know that you have a lot to focus on: the entry, the emotions, all that. And if you have to check for the market timing also, then that would be very difficult, right? The next point, as I would focus on, is it is easier to find directions in the swing trading market. Why? Because you see, this is from 17th of February to 12th of March. You can see that any person, layman, would understand that this is a downtrend. Whereas if you take the 1 minute chart, let me find that position. Can you see this? It moves a lot to the sideways market. The sideways market are more, the trends are absolutely less. Right. So that is what I said. It is much more easier to find the directions in the trading time frame if you have a higher time frame trade, which is swing trade. For example, can you see that the market is an upward direction trend? So you know that you have to place a buy trade, right? But if you go to a lower time frame chart, what happens is you see the market hanging in here in this position, then moving down and hanging in here for some position, and then since the market is on an overall downtrend in the lower time frame, people may see it as a sell. But these people are retail traders. The 1 minute time frame or the 5 minute time frame is not traded by people who have money. They are just retail traders. And who do you think will win in a fight between retail traders and the bigger institution? Obviously the bigger institution. So always go with the time frame of the bigger player. And the bigger player do not trade the 1 minute time frame. They trade the 5 minutes. They do not trade even the 5 minutes time frame. They trade any time frame above 1 hour, 4 hour, 1 day, weekly, monthly, right? So you're trading with people who have a lot of money, and therefore your chances of going right is much more higher. It's significantly improved. If you have been making losses in intraday, and I guarantee you, if you know a few basic concepts in stock market, which you can learn from this channel itself, there are a lot of links to the other videos which I'll be posting in the card section or the description. But if you have even the basic knowledge of the stock market, then in swing trade, I'm sure you can make money. Right. Now that covers the overnight position and identifying directions. Well then, if after if you agree with all the points which I mentioned above, then you will realize that it's much simpler to trade in the higher time frame because the noises are cancelled out. The directions is easily more easier to find. You are trading with the players who have a bigger time frame or a bigger amount of money. They are right most of the time. Since they have the ability to control the market, they are right most of the time. And if you're taking a trade in the direction in which they are trading, then you will get much more higher return. Well, another very important point when you're trading intraday, every split second you have to take a decision. A candle is only 1 minute. And what happens is when you see huge candles, you will enter it. Emotions come into play a lot when trading 1 minute time frame. But if you are trading the higher time frame, you get time to take each decision. You get time to make each trade. Hence, you will think more. Your emotional trade will be reduced by almost 50 to 60%. And you ask anyone who is into stock market, they will say that much more important than analysis is risk management and the trading. Emotions emotions Another point is, say that you're working, will you be able to look at the charts every minute? Do you think if you're an intraday trader you can place a trade in the morning and not see the chart till evening? and let it automatically close and you'll still make money, that is absolutely wrong. You will be making huge losses. For you, swing trading is the best. What I personally do is I am a chartered accountant student and hence I am busy most of the time. So every day from 7 to 8 p.m. I analyze the stocks and then I buy the stocks next day when I get time in my free time in the entry price which I had planned. And I just set the target and stop loss and just wait for 2 to 3 days. And every 4 to 5 hours, I just check my charts in the phone itself. How much easier can it be? I make more return because, as I said, the bigger players are involved and they make much higher, bigger movement. I trade less. I give less brokerage to the brokers and I don't impulse trade. Right. The highest, the most important point in this video, brokerage and STT. I would like to show you. I used to intraday trade a few days, till a few days back. Right. I'm not gonna lie. I'll show you the exact stuff. I was trading with a very low capital of say around 5,000 rupees, and then this was the profit I made. 1,350 was a profit I made. As you can see, the most of the trades are green, whereas some trades are red. That is normal, perfectly normal. I'm not the best trader in the world, but I am a good trader, I believe. So this was my game. But I did a lot of trades, up to 10 trades a day, and using a huge margin. What happened? Obviously, you can look at the charges. The whole profit got wiped out. That is what happens in intraday. Another example. You see this? 4,300 is the profit of that month, and 3,370 is the loss due to brokerage and securities transaction tax. Why? Because in the place where I should be placing one trade, I used to place 10 trades just because I could do it. I could do it. I was using margin like anything. Probably I would have made more if I was swing trading by putting in less effort, less work, not having to look into the screen every now and then. That that my friend is the, what do you say? That's what brokerages, the brokers hide from you. They want you to use their margin. Otherwise, why do you think that when you want to, you have such a low capital, why do you think that they give you margin? Well, they charge brokerage and the STT is charged as a percentage of the number of shares you buy. And if you're buying a lot of shares by using margin and a little out of your own money, then obviously if you're using 10 times margin, the brokerage will also be 10 times. The securities transaction tax will also be 10 times. And the movement, well, in intraday, the movement is hardly 2 to 3% a day, not more than that. The biggest movements are 2 to 3% a day. Whereas in swing trading, the movements can be anywhere around 10 to 15 percentage. And since you're not using any brokerage, the SCT will be too low. So the only thing you'll have to worry about is brokerage. That is a very favorable position to be in. The next, yeah, the next point I would like to cover is that, as I said, the bigger players are involved and the longer movement or the bigger movement are forming part of a swing trade. Like if you had bought here, you would get a movement of 9 to 10%. And say if you place a trade every once in 5 days with 10%, that is 50% in 40% in 1 month. That is a favorable position to be in. Even in intraday, I don't think there are people who make 100%, 200% every day. But for a beginner, a 40% per month is a really, really good good proposition, right? The impact of news. Let me tell you guys, this is one of the main points which you have to focus on. There are smaller news and there are bigger news. The smaller news in fact affect the intraday time frame 1 minute and you will be stopped out, right? But the smaller news have no absolutely no effect or minimal effect or negligible effect in the swing trading time frame. Okay. Similarly, the bigger news will have obviously effect in day trading time frame and swing trading time frame also. For example, when Corona had its impact on the stock market, the entire stock market fell down, whether it be on intraday and whether it be on swing trade. So that is what I need you to understand. The lower time frame do not affect the higher time frame, but the higher time frame, any movement in the higher time frame affects the lower time frame completely. So who do you want to trade with? You are, if you are an intraday trader, you are seeing the higher time frame. The higher time frame is making a move, you are following the move of the higher time frame and you are making trade in the lower time frame, which means you are already 3 steps below, you are 3 steps behind. Whereas if you are following the bigger time frame, you are trading with them, you're 2 steps ahead of who are the traders in the intraday time frame. 2 steps ahead, because they are the people, the bigger people are the persons trading the higher time frame and they have something which you don't have. They have more information which you don't have. They have more money than which you don't have. Another important but not so important point is that since you are swing trading, you are holding the shares. Holding the shares means you will be getting entitlement to any bonus or dividend issued by the company. That is not the case with intraday trading. No bonus or benefit or dividend will be given to a person because the intraday traders do not hold any shares. So that concludes my video, guys. So I would like you to understand the following things. If you are a beginner trader, completely absolutely beginner, or you are just like 2 years into trading and you're not much made much profit in intraday trading, well, this might be your missing link. You need to start swing trading and not intraday trading. Do not be on the wrong side of brokerage. Do not be on the wrong side of the smaller players or the smaller news. The risk to reward, all are unfavorable in intraday, and trading is all about tipping the probability in your favor. Just because you're getting margin in intraday doesn't mean you have to trade intraday. Even with margin, I have made more money in swing trading than intraday trading, and I have been trading for quite some time now. If you are a seasoned trader and you know ins and out of the market, then you can intraday trade, and that would absolutely be better for you. But if you do not have the time to watch the market 24 hours, or if you do not, at least during the market open to close time, it is better that you swing trade. Thank you guys. I hope this video was more informative to you. Please keep watching the content in my channel Price Action Ninja. And if you find it useful, please like the video, share it with your other trading community friends in the group. As the channel is new, I would like your subscription, I would like your support, and I also post analysis, trade ideas of how I am going to do the swing trade. You can maybe watch it to learn price action from me to trade swing trade. Okay, so that's it, guys. Have a good day.